What is up, everybody? Got a new trading room. That's right, I am no longer in a closet anymore, breathing in my own farts. Now I actually get oxygen, so hopefully that's going to help with trading. Look at that wall over there. That's a lot further than you think. And you know what the beautiful part about that wall is? Nobody is on the other side of that wall. Nobody's on the other side of that wall, or that wall. In fact, nobody's in this building. I get to yell and scream all I want because there is nobody within a quarter-mile radius of this trading desk. And I get to, I get to do the videos the way I've always wanted to do them and really come at you with some energy, baby. So, here's the problem, though. We are missing something because when I moved over here, that's right, I moved. I don't remember what I did with the Mike Bellafury picture that was once on that wall over there. So, until I can find it, the best thing I think we can do is I'm going to have to draw one. So, let's do it. Alrighty, guys. I tried. This is what I came up with. It is missing something. Let me just... Alrighty. Now I think it is looking really good right there. So, this is the best I could do. Mike, if you're watching this, I am sorry. I tried. I'm not an artist, but you can see I did spend some time on this, okay? So... let's go ahead and put it up on the wall, and then we're going to have to go ahead and, do that creepy cult shit that we do with the Mike Bellafury pictures. Mike Bellafury. Mike Bellafury. Mike Bellafury. Bless this trading room with one good trade. Amen. Alrighty, guys, now that we've blessed this trading room with Mike Bellafury's beautiful presence on that wall over there, and hopefully we'll continue to have one good trade after one good trade, I want to talk about the pros and the cons of tight stops. For those of you who've watched this channel for some time now, you guys know that I like to keep my stops tight. I like my stops nice and tight like a tight pussycat. This is Womack. He is one of my pussycats, and he can no longer get on top of the trading room because it doesn't exist up there anymore. All right, guys, I want to talk about tight risk. I want to talk about the way I trade. So I often get asked, how do you manage your risk? What is your stop? My stop's always been at 6 ticks. I know that seems insane, but I've been working with it for a long time. I know I can work within that. However, there's a point in time when it doesn't work. We're going to go over when that works, when that doesn't work. We're going to go over the pros and cons of tighter stops versus looser stops. So let's go ahead and just jump into it. So, pros and cons of tight risk, right? So the first thing is I get more tries. So assuming you have a daily drawdown, like all good traders should, mine's is $1,500. I'm trading 4 contracts on average most of the time. I get more tries by taking 6-tick stops than I would if I was to run looser stops. So each one of my stops is going to be about I'm going to lose $300 before commissions, right? So that's a $300 hit. And I can take, I believe, 4.5 of them, 5 before I hit my daily drawdown. Back to back in a row, right? And that's assuming I get in the trade and I just let it keep hitting the stop over and over and over. Okay? So I get more tries on my 4 lots than I would if I was to run a looser stops. If I was to run, 15 ticks, then I only get 2 tries. If I was to run 30 ticks, I only get 1 try. So for me, it's why would you want to have less tries to attempt to hit a setup? Because most of the time the setup doesn't work the first go. Also, keep in mind, I try not to get stopped out if I can manage the trade and cut it for lesser of a loss or a break even or even a small, tiny fucking win. I will attempt to do that, okay? So let's keep that in mind. So another pro of tighter risk is you can trade larger size, right? So, for instance, if I am running 30 tick stops, well, I only get 1 try with looser stops, right? On 4 lots before I hit my max daily drawdown. So what I would have to do is I would have to cut the trade up into 2 lots, maybe even 1 lots to get more attempts throughout the day. So now I'm going to be trading with less size to prevent myself from hitting that max daily drawdown. Well, when you're keeping the trade nice and tight, you can come in with larger size and, again, get more tries. So let's go down to the next one. I think you can cash flow easier. So what does this mean? When I get in, I'm all in, and then I start to scale out. I've tried adding into winners, and you have to treat each new add as a fresh position. So is this a specific area, a specific setup that I would actually want to add into this area? Because the problem with adding to a winner is my break even's down here, but once I add to it, it's dragging my break even upward. So that causes problems. Whereas on the other side, if you average into a loser, I'm here, the trade's going against me, this is my break even. Well, if I add in, that'll drop my break even down. The thing is, you want to treat each add, if you do that, as a brand new position, and you want to be hitting good areas when you do add. So that's just my opinion. When I talk about cash flowing easier, since I'm running tighter stops, 12 ticks would be a risk-reward ratio of 1 to 2. So I can get out of my trades a lot sooner. I can, to get that superior risk-to-reward ratio. And I can start scaling out and just cash flowing the trade a lot easier than somebody who's to run larger stops. So for instance, if I am running a stop of 30 ticks, well, I would need it to go 60 ticks just to have a risk-to-reward ratio of 1 to 2, right? And these are just my opinions. I'm talking out of my ass, but we're going to get into like my trading and shit. So keep that in mind, because I know somebody out there is going to get fucking butthurt and say something. I know you're going to fucking do it. All right. So these are my fucking opinions. All right. Let's just keep it at that. This is what I have to say. And if you agree with me, that's great. If you don't, that's fine too. Maybe you learned something, right? So go into this with an open mind. So, again, with the cash flowing, I would need, when I'm running tighter stops, I can start to get out and cash flow the trade a lot sooner, a lot easier, and honestly, so let's just move on to the next thing, if there is another one. So it is easier on mental capital. When you have tighter stops or when you're cutting the trade a lot sooner, it's just easier mentally than if I was to put on a trade and I got it going against me 20, 25 ticks. Then your asshole's really sucking up because that's going to be a bigger loss, and that might be hard on you, right? So that's it for pros. Let's go ahead and look at the cons. So with my specific style of trading, it only works in specific types of conditions. When it comes to running these tighter trades, it only works in specific types of conditions. And we're going to look at those parameters. That's pretty much this is where the gold of the video will be, is when we look at what are those specific conditions where I can get away with trading the way I do and where it works really well. I have to fight for bigger setups. So it's one thing if I'm sitting there attempting to scalp and stuff. I like to attempt to get bigger setups. I'm always looking for the bigger trade. So for my style, I have to fight more often than somebody with a bigger stop loss to get the trade to actually fucking run, right? The pro is it's easier on mental capital because I'm not going to be taking a huge loss, but I have to keep fucking fighting for it. So with that being said, that can bleed your P&L slowly. When you're constantly fighting into a trade, there's a point where you're going to have to just stop and give up and wait for something else to happen. And you might get caught up in the moment and just continuously fight for something and not realize, hey, I need to stop and let something else happen. So that's pretty difficult. That's kind of difficult in the sense that you need to be aware of what you're doing. And it's like, hey, I should probably stop fighting here. And in order to become aware and know when to stop fighting, you have to get away from the order flow and the price action and just go, hey, let's stop. So just having that awareness is difficult. Otherwise, you will bleed your P&L slowly. Whereas if you're running bigger stops, you're not going to necessarily bleed it with 1,000 paper cuts, right? You're just going to take bigger hits. So that is it for the tight risk. We're going to go ahead and look at loose risk. Pros. Less tries on bigger setups. I think that was the only pro I wrote. Less tries on bigger setups. Okay. Obviously, if you're scalping or you have a bigger setup that's just not working and you want to start scalping it off, you're really kind of fucking yourself with that looser risk overall. You really are. So let's look at the cons of loose risk. And some of these cons I'm talking about on tight risk are pros for the loose risk, like works in specific conditions, or bleeding out the P&L slowly. You're not going to be doing that with loose risk, right? You don't have to fight for bigger setups with loose risk. So cons, you get less tries. So you're getting less tries, meaning, like we talked about this earlier, what's your max daily drawdown? You know, if you're risking half of that on one trade or the full thing on one fucking trade, dude, you're getting less tries. And even on looser risk, you might need multiple tries to hit the bigger setup, to be honest with you. And you don't want to handicap yourself like that. You have to trade less size if you want to get more tries. Really, you know, you see what I'm saying? So if you want to get more tries, you're going to have to trade less size. So, and is it going to, and here's a problem with that. If you're trading less size, then you're going to have less to scale out as the trade is working in your favor. And that scaling out winners is something I really enjoy because it really does help. So now I'm having less of an opportunity to actually do that. So let's look at the next one. It's harder on mental capital. It really is, because when you're sitting in there and it's like going against you and shit, it's very tough to sit there and deal with it. Over time, you can get desensitized to it. But I think for somebody who's newer or whatever, it's just, this is why newer traders are so scalpy oriented. It's just easier to not take on risk. And it really is harder. So you're going to need higher RR setups. So for somebody like me trading a 6-tick stop, well, I have a 1 to 2 once it reaches 12 ticks. But if somebody's trading 30-tick stops, well, fuck. They need 60 ticks of profit just to have a 1 to 2 risk to reward ratio. So you're going to need bigger RR setups for those bigger, looser stops if you're going to be running that way. Otherwise, if your RR is backwards, you're really going to fuck yourself. You need to make sure you're hitting trades that potentially have good risk to reward ratio. Don't do it backwards. Too many people fucking do it backwards. They average into losers. Not going to name names, but there's some YouTubers who do that. It's not good. I know you can get away with it at times, but now I'm not opposed to averaging in the losers if you're hitting a setup in an area that is a good next entry area. But if you're just adding to it to try to fucking stop the bleeding and bring your break even down, you're really fucking yourself. Especially if you're not running stops at all. Okay, let's get rid of all this stuff. And let's go over some parameters of me trading tight risk and what I look for. So let's talk about three things. These are our three ingredients: volatility, volume, and tempo. Volatility. Okay, so volatility, and let's go ahead. What I want to do real quick is just pull up good old-fashioned paint. Okay, each one of these blank areas is a tick. All right? So volatility is how far the moves are going, right? So if you notice that the market is only trading in a 2-tick range like this, well, that's lower volatility, right? But if you notice the price action is going, how many ticks is this? 1, 2, 3, 4, 5, 6, 7, 8, 9 ticks. And you're seeing these 9-tick rotations, that's higher volatility. So that's high volatility. This is low volatility, right? And it depends on the market you're trading. I just trade ES, so keep that in mind. So within the ES, I'm not saying 9 ticks is high volatility, although that is. When you got these easier moves where it's just 9 ticks like that, that is higher volatility. Lower volatility would be like 4 ticks, and it's just grinding in these waves because really your price action is waves, right? Your price action, especially in the ES, because it's such a choppy fucking market, it's always doing these waves in it, right? So how far are those waves going and how easily are they going? Are you getting an average of 16 ticks or are you getting an average of 4 ticks? Is it 4 ticks right now and does it go into 16 ticks all of a sudden? Well, you just went from low volatility to high volatility. So let me go back to this now that you know what that is. So that's volatility, right? Volatility is very important because volatility is something you want as a scalper, because if there is no volatility, you're not getting moves to really run. They're not just going. And when I'm talking about scalping, I'm talking about momentum scalping or trying to get in right as it goes. I mean, as a scalper, you really do want the trades to move pretty much immediately. And there's certain conditions where that doesn't happen, and then scalping isn't going to be as good. There can also be volatility that's so huge that it's too fucking fast. We'll get more into that here in a minute. So the next ingredient is volume. You ideally want two-way volume. What the fuck does that mean? That means your bid and your offer both have market orders hitting at the exact same time. You want those market orders on the buy and sell side to be flowing in at a steady pace at the same time, okay? That's going to allow you to get in and out of the trade a lot easier. It's going to allow you to pick up a tick or scratch the trade a lot easier. If you don't have no fucking volume and it's barely trickling in, you're not going to have volatility. Volume and volatility are two different things. Your volume, how fast that volume's coming in, can certainly influence how far your volatility is going to be moving. Sometimes you can have large amounts of volume flowing in, but all of a sudden you just don't have volatility. And what's happening is somebody might be absorbing or reloading, or the order book, the DOM, your limit orders are a lot thicker. There are times where the order book thins out. Rollover is a good example. So the contracts on the bid and offer get a lot thinner than average. And when they thin out like that, it takes less volume to get more volatility moves. When the book gets thicker, when the DOM is thicker, those limit orders, the offer and the bid are thicker, it's going to take more volume to get that same type of volatility. Okay? So you want to be paying that. That's why the DOM is so good, because in the sense that you'll see that if it's thicker or thinner, and you can sort of gauge what your approach is going to be. The next thing, the final ingredient I would say, is tempo. So tempo is something I would say it goes with my, like, I trade volume profile, right? So I'm trading auction market theory volume profile. There are times where you just have this chop that makes no fucking sense. Okay? And then there are times where you have these good rotations in the exact spots that you think it's going to rotate. Good tempo is when, for example, low nodes are rotating where low nodes should be rotating, and you're just getting these rotations and tests in specific areas, and it's relatively clean. Bad tempo is when it starts to chop like hell. So you have bad tempo in very high volatility environments where the book is super thin. So when the book is thin and you have high amounts of volatility, you tend to get more excessive chopping before a trade actually sets up and goes. So you have to account for that. And very low volume, low volatility environments, like the summertime where it's barely grinding, you don't really get good tempo in that. I would say high volatility, high volume environments and low volume, low volatility environments are two opposite extremes. And both of those environments are very difficult to trade for me. That's how it is, right? Somewhere in the middle is where I do really good. So what does that look like? That looks like a bell curve. So here's the volatility curve, and this applies to my trading. All right, so I know you guys probably read everything. So over here, this is the flat line. This is where it would be low volume, low volatility right over here. This is where my trading suffers. Over here is super fast, where it's just fucking moving. Like before an FOMC announcement, the book thins up, you got a fuckload of volume, you got a shitload of volatility, and it's moving so fucking fast that a 6-tick stop is not going to work because you're going to keep getting stopped out over and over. And in those environments, you tend to experience a lot more slippage on your stop. So what you think was a 6-tick stop ends up being a 10-tick stop because of slippage or some shit. So this is this is where I don't thrive in either one of these conditions. There's a sweet spot, and I have a video titled Sweet Spot. I would probably argue to say this is going to be Sweet Spot 2 with a good visualization. But this has everything to do with my specific trading. So let's kind of, right now we have high volatility conditions. Actually, not today. Today kind of sucked. We didn't really have high volatility movements. We had very low volatility movements today. But let's start on this end of the curve and just kind of look at this. So I know there's 3 curves. I want you to kind of ignore that. This curve on the outside is tempo. The curve in the middle is extreme. This is your volume, and this one is book thinning and thickening. So think of this like volatility. So the outside is, again, tempo. Tempo. The middle one is your volume. And the outer one is volatility, or not really volatility. This is the thickening and the thinning of the book because that causes volatility. All right? This whole fucking curve is a volatility curve. High volatility, low volatility, right? So, again, the thinner the book gets, the less volume it takes to move the market around. The thicker it gets, the more volume it's going to take to get you that same push. So, for instance, on a very thin book where you only have 6 lots, let's keep it simple. You have 10 lots on the next 4 ticks. So let me go back to this paint, right? Okay, we got 10 lots here, 10 lots here, 10 lots here. This is super simple. It's only going to take 40 contracts to bump the price 4 ticks, right? Whereas if the book is thicker, right, and we got 100 fucking lots on each one of these, well, you probably see where this is going. It's going to now take 400 fucking contracts. So remember, we had 10 lots. It only took 40. Well, if that same 40 comes in, it didn't even clear this out. This would drop from 40 to 60, right? Because 100 lots minus 40 leaves 60 on the offer. Now it ain't even moving a fucking tick, right? It's going to take more volume for the same distance traveled on a thicker book. All right? So let's kind of look at this. So when we have good tempo, I have a sweet spot. So if we're in a super high volatility, so the left side of the curve from here over is going to be when we start to go into higher and higher and higher and higher volatility. And this is, the book is progressively thinning out as we go this way. And then your volume is starting to increase as we go this way. And typically when that happens, you start to get worse tempo, in my opinion. So that's what these 3 red arrows are. The book is thinning, we're getting extreme volume, and we got bad tempo on the far extreme edge. So it's progressively going that way the further we go. And these are 3 things, again, that I'm looking for when it comes to actually how can I approach the market. Because when you approach, different conditions require different approaches, and that honestly is what makes trading so fucking hard. Because you have to be like a weatherman, and you got to have a fucking bag of tricks for the different conditions. And those of you who are learning to trade in this environment for the first time, you're going to struggle when it goes to the summertime. Vice versa. And this is what makes trading so difficult. At least trading one fucking market like the ES. So, as we go up to the sweet spot on this volatility curve, we're getting good tempo, steady volume, and the book is thickening a bit. Okay? Now, over here where this is like the summertime, right? This is when nothing is happening and the motherfucker just sideways. And you just have these 2-tick ranges and it just sideways forever. And a 2-4-tick range for hours. That is flatline. That, you're going to have bad tempo, no volume, and the book might be thickening in those conditions. Typically, the higher the market goes towards all-time highs, typically it starts to get thicker. And as the market starts to crash, like this invasion of Ukraine or just whatever, when the market starts to get below its 20-day moving average, it starts to thin up. So that book starts to thin up, and then you start to get more volatility because of that. When you get closer to all-time highs, it tends to get thicker. Can there be exceptions? Yeah, there can. So when we're in an area where it's the summertime and it sucks, I want to see good tempo. I want to see steady volume. So I want to see that 2-way volume. I want to see the bids and offers being hit at the same time, because in dead volume, you're only getting 1-way volume, meaning one price, it'll hit the bid, barely anything will hit the offer, and then the market will tick down, but then barely anything hits the bid, and then it starts hitting the offer mostly. So trying to pick up a tick, just a tick in those conditions sucks because it's so hard, and you're going to more likely get trapped in fucking trades and that type of environment because you can't get the fuck out. So we don't want to, there's exceptions to this curve. We'll talk about that later. But let's kind of keep it simple. Let's look at it. So up here I have a sweet spot. Ultimately, this is where tight risk works really fucking good. The market isn't too fast. It's like the Little Red Riding Hood story. You know, Little Red Riding Hood? She broke into the bear's house. There's like a mama bear, papa bear, and a baby bear, and she straight up broke in there, and she started eating their porridge, and she didn't like this one because it was too hot. This one was too cold, but this one was just right. And then she went and fucking took a nap in their beds. This bed was too stiff. This one was too soft. This one was just right. That's what this is all about. Bell curves are really amazing things. There is a sweet spot where you can run super tight risk, and it just works. And you need those 3 ingredients. Notice the good tempo. I need good tempo no matter what. If I got shit tempo and high volatility, and I got shit tempo and low volume, low volatility, well then that's just gonna make shit a lot fucking harder. And notice how I have good tempo on the outer edge of this curve. With good tempo, without good tempo, it's not gonna be as easy, right? But if I have good tempo, it sort of widens that sweet spot out. It widens the curve out. Good tempo is everything. Okay? Steady volume is very fucking important. Notice how I have steady volume. No volume is really bad, and extreme volume isn't bad. Extreme volume is not bad if the book is thick enough. If that book starts to thin out, then that's going to make the market move so fucking fast that as a human, it is impossible to fucking just trade tight. Okay? So I want a steady two-way flow. I want the bids and the offers to be getting hit at the same time, and I just want a steady flow of orders. I just want orders to constantly be flowing. Okay, and the problem is when you get into the summertime, those orders will stop, and then it'll be one-way volume, one-way volume, one-way volume, and then it'll flow kind of quickly and then stop. One-way volume, one-way volume. Okay? And then super fast environments, you'll constantly have this chugging really, really, really fast, and then it'll slow down a little bit. And when it slows down, your volatility actually tightens up slightly, and that's where you can kind of time a trade in those environments. So, in speaking of that, as we come and trade higher volatility, higher volume environments on a thinner book, now I want to change my approach on this side of the curve. I want to make sure that I'm waiting for the volatility to collapse, and I want to see the volume actually slow down, and I want to see the tightening of price action before I hit the actual fucking trade. And on this side of the curve, I'm going to be more quick at getting in and out of the trade. Get in, get out, and I'm probably not going to break even. What I'm going to be doing is I'm going to be hitting a flat key, most likely. The closer we get to this further edge, the more likely I'm going to hit a flat key. The further we get up this curve, the more likely I can actually use the mouse cursor to get out of the trade for a break even. Okay? Same thing with taking profits, because sometimes you'll get these sharp up moves and then it'll just collapse right in, and you need try to get out as fast as you can. So over here, the approach is vastly different than over here. Over here, I can be super duper fucking tight. I can get, hell, all the way when it's dead volume, up until it's dead volume, somewhere in the middle of this curve, on this side, I can get in and out and not even let the trade go against me a tick for the most part, maybe a tick. But I'm not going to be getting stopped out as much. In these conditions, I'm going to be getting, especially over here, I'm going to be getting stopped out all the fucking time, and that's where this style of trading isn't going to work. But over here, I'm going to be getting in and out of the trade, but the problem with that is there's no fucking volatility at this point. There's a lack of volatility because, again, this is a volatility curve. More volatility over here, less volatility over here. So the problem is I keep getting in and out of trades, but they're just not running. They're not working. So therefore, momentum scalping or just scalping in general does not work that good on this side of the curve. So I could maybe pick up a tick, 2 ticks, 3 ticks. That's it. So the further we go down here, the less ticks I'm picking up on a scalp. And the problem is it's just not worth it at that point. At that point, it's just not worth. It's just not worth being tight and trying to fight into a bigger trade, if you will. It's just not worth it. And it's not worth scalping the further you go down this curve because, hell, if you're running a 6-tick stop, well, you're not even picking up 6-tick moves, or if that's all you're picking up is 6-tick moves because that's the average rotation of the price action, then that's a problem. That's a 1-to-1 risk to reward ratio. You need it to be moving a bit more. So at that point, that's when it doesn't work. But over here on this side, you're getting more movements and you're more likely to scalp. And just over here, especially the further down you go to super fast, the more you want to fucking scalp. So less scalping over here. This is where you want to most likely scalp and not actually hold fucking trades. So up here is where I want to actually start to hold trades. So hold trades up here. Start to scalp more as we come down this general region, because now you're getting bigger volatility moves, and you're going to be able to pick up really good trades like momentum scalps because you're just getting more movement to them the further down you go. Now again, at some point it's too fucking fast that you're going to, at some point, as you go down this, 6-tick stops just does not fucking work. Same thing over here, 6-tick stops. Yeah, it works, but now you're picking up less and less ticks on the upside. So with that being said, so this is the sweet spot. Again, this is where right in here when you have all 3 ingredients, so that would be volatility, volume, and tempo. Is the volatility good? Do we have good volume? And when I'm talking about good volatility, I do want to see, these 8-tick rotations. So, and when I'm saying these rotations, it's easier to see on a 3-second chart, which is that heat map I have next to the Jigsaw DOM. If you guys want to save $30 on Jigsaw trading, use my affiliate link in the description and then use my coupon code. Save yourself $30 on that. Definitely help me out. Appreciate it. But anyways, with that being said, I want all 3 ingredients for that style of trading to work. And part of the reason I'm sharing this is because some of you guys get into this and start to do tick drills, but you're getting into it maybe on one extreme or the other, and you don't understand these ingredients and you don't understand what you need to be looking for, and just really getting to know the ES and these different market conditions and these average rotations of these volatility and the movements. It's just like it's something you're just not thinking of, you're not aware, and hopefully this brings it to the forefront to where you can think of it and adjust, because tick drills does not work in all conditions. Okay? Today would have been a good day for tick drills, but it wasn't working for me in the sense that, yeah, we did. So what was interesting about today, and I want to talk about today real quick. So let's back it up. So what was interesting about today is we at least in the afternoon, we were having about 4-tick rotations. So 4-tick rotations. We had steady volume, but it wasn't that high. It could have been a little higher, but it was good enough. Volume wasn't the problem. So the volume, I would say, was relatively good for what it was. The problem is the volatility sucked. So this is where this curve isn't perfect, okay? It can be more skewed to where you have your volume is in a sweet spot, but the volatility isn't. The volatility, well, actually, this is the volatility curve, so maybe I should retract what I was saying. Either way, this isn't fucking perfect. Okay, I'm trying to paint a picture of what's going on, so hopefully you guys can get an idea. Really, there could have been more volume today. Let's put it that way. If there was more volume today, we would have had more volatile movements. So really, the volume was kind of on the lower end of it all. But it was still two-way. It was still good to where you could get in and out of trades pretty fucking quickly. And again, volatility is definitely going to be affected by how much volume is coming in, but also the thinning and the thickening of the book is also going to help with volatility. So again, volatility is affected by how thin is the book versus how thick it is and how much volume is flowing in. So they kind of all, it's a three-way relationship. Let's just put it that way. So today had good volume, but not good volatility. And at some point, the tempo kind of fucking sucked. So I had one ingredient today. And it made today really hard. So we had one ingredient. So this one ingredient would be this inner curve right here. From here to here. The inner curve. When you have one ingredient, and it can be any of the ingredients, okay? It can be volume, it could be tempo, it could be the thinning of, really the tempo is like king. If I have good tempo, then anything can really go down unless the volatility is too high or there's no movement, right? So if you have one ingredient, whether that's volume, volatility, notice how it's thinner. When I have two ingredients, this curve starts to expand out wider. And then when I have all three ingredients, it's expanded out further. So this sweet spot goes from being this thin to thicker to way fatter. So I am looking, again, it's like baking a fucking cake or some shit. I've never baked a cake in my fucking life, but I imagine that once you have all the right ingredients, it comes out just right, right? So that's what I'm saying here is like I am looking for these specific things and I want them all to be just right, like Red Riding Hood when she broke into those fucking bears' houses and shit in all their toilets, right? And didn't flush and she said, this toilet feels the best on my ass, right? So that's what I'm looking for. Is the volume really good? Is the volatility really good? And is there tempo? Is there good tempo? And if so, I am now sweet spotting and I can trade tight risk. And if I have the tempo, I can fight into a bigger hold and it'll actually work. If I don't have the tempo, but I have good volume and good volatility, or really at that point, the thickening and thinning of the book doesn't matter per se. I know I drew it on the curve, and I know I'm confusing the fuck out of you guys, and I apologize. Try to just bear with me. Volatility. Again, I don't want the volatility too fucking high. Don't want it too fucking low. Okay? Now, it could be really high volatility, but if the book is really thick and you got good two-way volume, then that's going to be easier to get in and out of the trades. And this is why I'm saying this curve isn't perfect. right? It's going to get skewed in different conditions. So if I have this, I have a lot of this ingredient, but not enough of that, then the sweet spot is going to be adjusted, right? And throughout the trading session, this sweet spot is constantly changing. The entire day isn't just sweet spotted, okay? Now let's put it this way. From November up until the beginning of February, because I stopped trading and I moved, I was crushing it. So the market overall was sweet spotting for me, okay? But my approach was different, right? It was pretty volatile, but I'm more scalping at this point. I'm taking these medium-term scalps. They're not micro scalps. They're not these high-end big holds. There was a combination of those, but I'm taking these medium-term scalps, and I'm sweet spotting by doing that. And that's another thing. There's a point in time when I can hold and when I can't hold the trade. If I'm trying to hold the trade, but the conditions aren't warranting for a hold because it's just not right, well, if I'm trying to hold a trade that is only a scalp, well, then I'm no longer sweet spotting. I'm trading somewhere over here in a weird spot. So me sweet spotting is going into it and scalping it or doing something very specific with my approach and trying to stay up in this specific area. I know I can get away with doing this in these conditions. If I try to do this in these types of conditions, well, that's not going to work up here. It's not going to work. And the same thing applies to running tight risk. It's just not going to work on these extreme edges. What's probably going to work, and I've been experimenting because I hadn't traded for a month. I sat down and traded like shit. I did okay. So it's like, okay, let's go back on demo, because when you haven't really traded for a month, you kind of trade like shit. Not going to lie. And not being here all the time just really fucked it up. It's a different environment. Hopefully with the blessings of Mike Bellafury, I can get back into it. And also, I did so well for so many months in a row that there was going to be a point where my trading was going to slump out or suffer at some point. I knew it was coming. It happened. It's here. So, and I'm just now getting back into this shit, guys. So that's why there's been no videos. Because I've been moving and I've been trying to get my place ready to sell and all this bullshit. Shitty process. But anyways, what were we talking? Oh, yeah. So the Discord link is not working in any of the other videos, but from this video forward, the Discord link is working because somebody's Discord, they decided to terminate it, and then somebody recommended my Discord, so I had a huge amount of fucking people just flood in that weren't coming from my YouTube. I want the people that are in my Discord to come from my YouTube. I feel the people that aren't coming from my YouTube don't really fit in that well. And I made it for you guys. So, yeah, you go into a Discord and you're like, who the fuck's Fat Cat, right? It's like you're missing so much context. If you guys like the efforts I put into these videos, I do have a Ko-fi. It's a donation page. I'm plugging myself because I spent a lot of time making this. So if you like it and this really is helping you, please feel free to donate. Think of it like a tip, because YouTube don't pay shit. Yeah. There is a specific type of environment where this style of trading, you can definitely do it and you can definitely get away with it, and it works beautifully. But there is a point where running tight risk just isn't gonna fucking cut it. It's just not gonna do it. And when you have these super fast environments, that's when you can run bigger risk, because you're gonna get even bigger reward. And that's what I want to talk about. Looser stops is not a good idea necessarily in these other environments where you're just not getting that same amount of movement. If you're risking 30 ticks, well, the day better be averaging 60 to 100 ticks, right? you better be getting like a 1 to 2 risk reward ratio at least, at minimum, to be running larger risk. If you're going into the summertime and you're running fucking 30 tick stops, but the market only trades a 30 tick fucking range, well, that's way too fucking big. Now, 6 ticks might be tight as well. I don't know. We'll see what happens when we get in those fucking god-awful fucking environment. We'll see what happens. I don't look forward, like they say, trade till May, then go away, because it really fucking sucks when the market is on this end of the spectrum. When it's over here, it definitely has great opportunities, and the more it's over here, the better the scalps get, baby. They get sexier. Over here, the approach is going to start to shift and change. So, hopefully you guys enjoyed that video. Hopefully you guys enjoyed that picture right there. If you want, maybe I could draw a picture of you. I'm just kidding. I'm not doing that shit. Anyways, guys, have a good one, and I'll see you in the next one.